Hello again, this is Alex with MasterChartsTrading.com and this is market recap for Friday, November 1st, 2019. As always, please hit the like button, subscribe to this channel and share this video with others. So, quite a large presentation we have today. We'll look at major indices as they again hit all-time record high despite lots of bad news and just wild crazy world events. The good news is that technology, financials, industrials, and semiconductors are leading the stock market higher. So these are offensive sectors, and I'll explain what I mean. Worldwide, Japanese, European, and various other equities are also moving higher. We'll do a couple of trade updates, one on Apple, one on Cardlytics. We'll look at bonds, and we'll look at the yield curve again as it normalizes actually. Oil is still indecisive. Natural gas, maybe it's a setup to sell it. And we'll briefly look at Forex action because we have a lot of trades going, and I'm not going to cover gold because, again, we have a trade going. And crypto review, we'll see if bull market and Bitcoin will continue. All right, so throughout the presentation, as always, I will be using my proprietary MasterCharts Trading. You can see where I'm hovering, MasterCharts Trading price action indicators. These are available on TradingView.com. If you have a free TradingView account, you can have these same 4 lines on your chart. All you gotta do is just sign up at MasterCharts Trading, where I'm hovering, sign up, and then subscribe to the trading indicators, and I'll open the door for you. They are well worth the $29.95 per month. But in any case, I will be using the indicators to show the price action and to highlight interesting, uh, important points. So number one point is record highs. Unequivocally bullish chart. This is S&P 500. S&P 500 became bullish, in my opinion, back in February of 2019. Before that, there was a lot of fluctuations here, and I thought that we have entered the bear market back in December of 2018, but we turned back around and there's a breakout. So we've been trading S&P 500 on the upside ever since. Uh, Again, unequivocally a bullish chart. QQQ, the Nasdaq 100 ETF, also is at record highs. So this is again unequivocally a bullish chart. Where do we buy it? We buy it on pullbacks. I like to personally buy it on pullback, on a deep pullback towards the blue line. And here's was such an opportunity back in where I'm hovering, June of 2019 of this year, and this is good for over 13%. And keep in mind that this is an ETF, so there's a lot of stocks in there. So this is a large gain for an ETF. Again, unequivocally bullish chart, so again, we should not be looking for any kind of tapping patterns, any bearish engulfing or anything of that nature, and simply look for opportunities to buy on any pullbacks. Same goes for Dow Jones, we're at record highs, so same general principle. So several interesting developments. Here is XLV. Technically, it's not really an offensive sector. It's like a right in between defensive and offensive sectors. And when I say offensive, I mean it's a higher risk stock sector. So, for example, industrials, XLI would be considered a higher risk um, stock sector, and you can see that it is almost at record highs as well. And for example, previous alert here from 15th of August resulted in over almost 10% gain for this sector. So again, industrials are is considered a offensive sector, in other words, higher risk than some of the other sectors, as in, for example, staples. Staples are or utilities or real estate. Staples, utilities, real estate, they're more of a risk-off kind of sectors. Uh, Defensive sectors more. Whereas in case of industrials, technology, financials, and consumer discretionary. Of course, these are called offensive sectors because they are more of a higher risk. So industrials pushing to new records is a very good sign for stocks. It is showing that the market is broadly bullish. In other words, lots of stocks are pushing higher. And as a result, we want to say that we want to be just keep buying. We do not want to be looking for any short setups right now. Here's financials, and again, 52-week highs. So financials include various banks. You can see multiple up arrows, and these are actual alerts to my subscribers at MasterCharts Trading. Latest alerts were successful for close to 10% gain as well. Here's a very nice trade we did to XSD semiconductors. Semiconductors is excuse me. Semiconductors is also very much an offensive sector because it is part of the technology. So XSD, diversified semiconductors, basically there's the alert right there in June of this year, and then I would probably still hold this and keep trailing it, and you can see a very nice gain, close to 22%. Overall, technology, semiconductors leading higher, good news for the stock market. This means that there is plenty of interested uh, buyers, even at such inflated prices. On the foreign markets, you can see also very nice breakouts. For example, here is EWG Japan, and you can see a couple of alerts, and this is just a perfect looking breakout. I love this type of patterns. You can see a close above the blue line right there on 13th of September. Again, you can get more information at MasterCharts Trading about the lines. Same goes for here at 27th of September, and you can see a very nice gain as well. You can see a over 4% gain for Japanese shares. So looking really good right now. European shares as well. You can see latest alert was here on 6th of September, over 5% gain. Again, remember this is a diversified, highly diversified ETF. So in other words, very broad rally. We're seeing strength in many corners, and I'm talking about sectors, um, industry groups, as well as countries, uh, kind of breaking higher and moving to new highs, and sometimes breaking into a new bull market. So overall, I mean, I'm sure there are pockets of weakness, but overall, vast majority of stocks are moving higher. So we should be again looking for buying opportunities. And here's what I mean. Here's VEU All World ETF. So this is as diversified as it probably gets. Um, and you can also see here a breakout higher, over 5% gain here. Very nice looking chart. I think it will probably continue higher, or at the very least, we'll see new opportunities to buy in the future. Right, some of the trades we recently did. Apple, for example, here. Here is Apple on the daily charts as usual, and several alerts. We got 3 alerts that were sent. Um, Beautiful 27% gain. So hopefully some subscribers took the opportunity. Again, for example, here, this is a bearish pattern. Let me show you what the bearish patterns looks like. That's right there. Um, on the 31st of July, 1st of August, these are very bearish candles, and they were exactly at the green line, exactly at resistance. So did we short it here? No, because this is obviously a bullish security. So we were looking for a pullback. So this is what we got. For example, here's the pullback. It occurred here in August of this year, early August of this year, and you can see a nice 27% gain following the latest alert. So again, don't look for tapping patterns on bullish security. Here is just a blockbuster trade, um, CDLX. Cardlytics, I think it's some sort of an advertising firm. I thought it was initially a biotech firm, but I think it's an advertising firm or something like this. But no-brainer trades again. So there's the breakout. You can clearly see it in the chart. 22nd of May, simply a close above the blue line. Again, you can get the indicators and you can just trade on your own. There's the breakout. And then we sit in the position and we do nothing. And we have 92% gain. So congratulations to subscribers. All right, let's switch gears a little bit and look at TLT, the treasuries. Treasuries, we were trading it. I had a position myself open. I opened it well way back when in January of this year for very nice gain. You can see I kept selling, eventually closed the position. But overall, it's still very nice, solid trade. Right this instant, looking at TLT treasuries, and then we had an announcement by the Federal Board that they're lowering the interest rate. So it is indeed helping the yield curve. I'll show it in a second. Now, just looking at this chart, there is still a possibility that this was it. 15th of August top, maybe a double top here. 15th of August, 28th of August, early September. Maybe that was it. Maybe that was a double top. Um, Maybe not. So we'll see again if this lowering of the interest rates will push the bond prices even higher. Um, Here is the yield curve. So you can see the yield curve is pretty normal. This is today's yield curve right there. So you can see that the very short-term interest rates are the lowest of the bunch. You can see there's 2-year, 5-year, 7-year, 10-year, 20-year, and 30-year. And this is a normal thing to have short-term interest rates below the longer ones. If I backtrack a little bit, you can see that this was not the case even very recently. You can see the short-term interest rates were actually above some of the longer term ones. Now, we did not get to the actual inversion of the yield curve. In other words, we got short-term interest rates above the 30-year, as in, for example, it happened back in 2007. You can see an inverted interest rate yield curve. Afterwards, the stock market collapsed. Similar picture happened back in year 2000. So right this instant, it doesn't look too bad. In fact, it looks quite nice. So I think the interest rates finally have become normal. So perhaps the Federal Reserve has indeed succeeded in averting this, inversion of the yield curve. Looking at the chart, I want to see a pullback towards the blue line, currently at 135, before I'll even consider opening any new positions. Right, let's switch gears. Let's look at oil. I apologize, it's a busy chart, but you can see that this is actually, I kept trading on this chart. So let me zoom in on current action. Currently, you can see the price is between the red and the blue lines, and it's indecisive. So as early as September 30th here, I actually was shorting it, and I had made a little bit of money here, but right now we could see a breakout above the blue line, 57.51. That's the level to watch. If there is a close above the blue, I think we could easily see oil go up to, I don't know, $66, maybe even $70. Not a prediction, obviously, because anything can happen, but it sure looks like oil could go higher. I do not look at fundamentals at all. So like all of that supply demand attacks, in Saudi Arabia and all that stuff. I mean, it's news, it's important, but is not shown on this chart. Like I don't care about news on this chart. I only want to know where the price is going. All right, let's look at natural gas. Natural gas is currently trying to consolidate the gains from the basically lows, and you can see it is now above the yellow line. What is the yellow line? Yellow line, in my opinion, for commodities is a aggressive short level. In other words, if the price gets up to it and then closes below it, like it did right there where I'm hovering 24th of September, you can see the price came up and then closed below the yellow line. The aggressive short traders could short sellers could try and push the prices lower here, and they did that. Will it happen this time? We'll see. Me personally, I want to see a bigger bounce towards the conservative short levels at around $3, and then maybe we can initiate a short position. Not right now. All right, briefly, a dollar index, very interesting action. You can see the price broke below the blue line on the 17th of October. Again, more information at MasterCharts Trading. Price broke below the blue line. Tried to come up above it. You can see several touches right there from late October and then bounced off of it. So right now I see a new low for the move, and the bearish levels are really close at 97, 96.77. So we could see a rollover and a breakdown in the dollar. In fact, most of the currencies are already bullish versus the dollar, except for euro. Right, briefly, let's look at Bitcoin. So Bitcoin, very interesting action. You can see it bottomed exactly at the red line. Um, we did not short it here because there was no trigger, and then it just kind of popped higher. So far, I see resistance again at the blue line here. Uh, but this could be like maybe a bull flag. So this is a handle of a flag, and maybe this a pennant, something like this. So you know, open mind. Yeah, if it continues higher, close above 10,038, no problem. We'll keep buying it. If it closes below 74.85, we will short it, sell it. Litecoin did just that. It closed below the red line right there, back on September, and I sent an alert. This is an actual alert, good for 35% on the short side, and it's not really doing much yet. I mean, you can see just a sideways action. This is a bearish security still, very much so. And then here's Ethereum. A little bit stronger than Litecoin, but overall still in a bear market. Again, same thing here. Alert on the 24th of September, good for 20% gain. All right, so that's it for today's recap. Please head over to MasterChartsTrading.com. That's MasterChartsTrading.com, one word. Click on sign up and sign up for one of the trading services. We have 3 services. You get free trial, a 30 days trial on all of them, whichever you sign up for. So subscribe to alerts, and alerts, this is what I'm referring to. For example, this is a actual alert for Apple, and there's a bunch of them, and this latest one was good for 27% gain. So congratulations to subscribers. So these are the alerts. Subscribe to the alerts, $24.95, or if you get yearly, billed yearly, it's a much better deal. You can cancel anytime. If you want the trading indicators, the indicators that I'm referring to are these green, blue, red, and yellow lines. You can also sign up for that and sign up. That costs $29.95. So you can also get it on a yearly basis. And if you want both, if you're ready to trade and to get my alerts, then of course you can sign up for both, and I think it's a great price at $49.95 each, or you can get a killer deal that will not last, by the way, and sign up for yearly. Okay, that's it for today's recap. Don't forget to share this video with us, with others, and of course, like and follow me on my social media. Thanks for watching. Bye bye.